It's been 1 year since American banking giant Lehman Brothers collapsed. Its demise triggered the worst global recession since World War II. Wall Street has made a gradual recovery since then, but many people still feel the hurt of the financial nightmare. Zhang Yajing has the story.
Lehman Brothers was once described as a company that was too big to fall. But when the government decided it wasn't, the storied institution declared bankruptcy. Lehman's demise sent shock waves down a domino chain, leaving the financial world reeling.
You'd go home on a Friday with Bear Stearns, you come back Monday, they'd be out of business. You'd go home on a Friday with Merrill, you come back Monday, they'd be gone. I mean, it was just, no one ever dreamed of seeing days like that, and I hope we never see them again.
While Wall Street saw a big bond on its business, ordinary people saw anger, fear, and desperation. Retired British tax official Peter Howard watched Lehman's bankruptcy on TV. He thought he was just a spectator. But within days, he and thousands other British pensioners received letters informing them that their funds were tied into the most complex bankruptcy in history.
It starts with anger, but for them it progresses to fear, and it's a fear of the future. You know, they've worked all their lives and now and set themselves up, you know, reasonably comfortably, and now they see all that gone, and it's changing their lives.
Howard contacted other investors from around the UK for compensation. He's confident they will receive compensation, although for now the fight goes on. While on the Wall Street, big banks are regaining their appetite for risk. Financial analysts have begun to feel worried as big banks are making money again in essentially the same ways that thrust the chaos last fall.
Well, I think the cynic in me says that, give it a couple of years, people will forget all of this and something else will blindside them, or people will convince themselves that this time it's different. But what you usually find, whether we're heading up or whether we're heading down, if we've gone too far in either direction, this time it's never different.
Analysts say there have been no significant changes to the federal rules governing the bank's behavior. No one is predicting another meltdown from risky trading in the near term. Rather, the concern is what happens over time as banks' confidence grows and the memory of the 2008 financial crisis fades. Zhang Yajing, CCTV.
Well, for more on the anniversary of Lehman Brothers' collapse, we're joined by correspondent Nathan King. He's in front of the New York Stock Exchange. Hello, Nathan.
Hello.
It's been a year since the Lehman Brothers filed for bankruptcy. Could you give us a sense of atmosphere around you now?
Well, it depends on what side of the street you talk about, whether it's Wall Street or Main Street. Wall Street has essentially bounced back. The stock market is up 50–60% from its lows of last March, and the banks are making money again. Some record profits and big bonuses are back on Wall Street as well. And President Obama is currently in the hall behind me here trying to address some of the reforms that he wants to put into place, because there's a real feeling here amongst Main Street people that it's business as usual on Wall Street, despite the fact that we saw the collapse of Lehman Brothers and the injection of $700 billion of rescue money, and also shoring up the financial system to the tune of trillions of dollars. There's been $1.6 trillion lost in this economic meltdown, and the fear is it could happen again if we don't see regulations change. Now, on Main Street, there is a lot of anger at these bailouts. Unemployment has been rising. It's near 10%. People are finding it hard to get credit, and they're also seeing the value of their homes plummet. So there's a lot of anger. So President Obama is trying to address this with some new thoughts on how to regulate some of the biggest financial institutions in the world.
We know that President Obama has already taken a series of measures to save the U.S. economy, including the increase of tariffs on the import of tires recently. Are these efforts really going to drag the country out of the financial crisis? And how do the U.S. people feel about these plans?
Well, you know, there's been a lot put in place to shore up the financial system, and there's been a big stimulus package near $800 billion, but still the economy is sluggish. It looks like the economy will go back into growth into the third quarter, but there's a big debate here about whether it will be a robust recovery with jobs, a V-shaped recovery, or more like a U-shaped recovery. The biggest fear out there in the economic landscape is that we could get what is called a double dip. That is, with all this investment that's been put into the economy, things do turn around, but once you withdraw all that stimulus, the economy then fades again. That would be a very difficult scenario for the US, because you need to create something like 500,000 jobs a month for a couple of years to get back where we were just 18 months ago. So there's a real wait-and-see period now to see whether, look, the stimulus is still there, but what happens when you take it away? And also what happens to the financial system when you start withdrawing the support? And President Obama is signaling in his speech right now that the time is nearing for that, but he's not going to hurry it. And it does seem as though some of those banks that owe the taxpayer billions of dollars will still keep hold of that. What he's saying to the American people is, actually, we're making a profit on some of this. We will come back to us eventually. Just hang on and wait and see. But he says he's determined to push forward with regulatory reform to make sure this sort of thing doesn't happen again. That means requiring banks to pay for their own mistakes and carry more capital. We'll wait and see if he's able to get that through the US Congress.
Well, many blame the financial crisis on bankers' lavish multi-million-dollar bonuses. How do they react to the criticism, and will they continue to receive such big bonuses?
Yeah, the main criticism is surrounding the bonuses, because bankers were rewarded under the old system for taking short-term risk, which delivered massive short-term profits, but wasn't good for the long term in terms of stability of the banking sector. And as people were making huge bonuses on Wall Street, what was happening was the bank's leverage was going up, sometimes 15, 20, 25, 35, 40 times what their capital was. That is essentially borrowed money in the overnight money markets. And what the collapse of Lehman showed is that if you are over leverage, you cannot get more capital on a short-term basis. So that is very difficult to change. But we have seen record bonuses paid out, for example, from Goldman Sachs this year. That has created a lot of anger here in the United States. So there are moves at the G20 as well coming up in Pittsburgh later on this month to try and reward bankers for long-term performance, not short-term risk.
Well, many say the economy has bottomed out and is now recovering. Is this a widely shared feeling in both Wall Street and Main Street?
You know, the signals are there. You know, the forward-looking indicators when it comes to things like factory orders, ordering of plant equipment does show an uptick. Even housing is showing an uptick. But the qualifier here, it's from very low levels. The economy literally fell off a cliff after the collapse of Lehman Brothers this time last year. It was already in recession, and it made it one of the worst recessions since the 1930s. The big question now for the US economy is, can consumer spending come back? And that will largely depend on the employment picture. 7 million jobs have been lost in this recession, and when people are out of work, or they fear that they're going to be out of work, then they don't spend. There have been some incentive programs, like the cash for clunkers buying cars, the government helped out there, but these have only been short-term things. And also, over the last 10 or 20 years, American households have built up so much debt, and now they're seeing that that debt window is shrinking. Their credit card limits have been shrunk, so it's going to take them a long time to pay off that debt. I don't think we're going to return to the 1990 go-go days anytime soon.
Well, thank you very much, Nathan, indeed. You're watching CCTV International. More news ahead. Stay tuned.